Welcome back to On the Money with Ryan Wheelis, financial advisor and the founder of Allied Wealth, offices all around the Houston area. Financial advisors here to help you with your retirement planning, income planning, tax planning, estate planning, healthcare planning. Everything that is on your mind is simply a phone call away. No cost, no obligation. We have people standing by the call center right now, 844-944-7555. Or if you're watching us on the YouTube channel, you can still call that phone number. Might not be operators live, but schedule your own no-cost financial flight plan review. A couple of topics I wanted to hit on right now. Let me start with the behavioral finance, always one of my favorite topics.
Area spike. I mean, this is something folks really need to listen up on, because when you're saving for retirement purposes, you got your pension and your 401k, you can't really mess with it within reason. All right. Mm-hmm. But once you get that money out, this stuff really comes home to roost, because now you're depending upon that money to provide your paycheck. You left your job. You have no more paycheck. You got to use your dollars to finance your lifestyle. So the stuff Spike's talking about right now is super important, folks. So listen strong.
And it's not just my opinion or Ryan's opinion here. Mr. Daniel Kahneman, he won the 2002 Nobel Prize in Economics. He's considered the 7th most influential economist in the world. He just passed away a few weeks ago at the age of 90, and he was a big proponent of these. I just want to list some of them, and for our listeners out there and for our viewers on the video, I want you to think of yourself. I want you to think, when you've thought of the markets or something you wanted to invest in or something you didn't want to invest in, did any of these affect your thinking? Recency bias. This is overweighting the importance of recent events. I personally start to think of the elections or what's going on with Nvidia and the ups and downs of the markets. The illusion of control, overestimating your own ability to control events, or more importantly, your investments, because you're the one with the hands on the steering wheel. Hindsight bias, the perceived that past events are predictable when they really weren't. Did you see 2020 coming? Did you see a pandemic? Did you see 2000 coming and the dot-com bubble or the housing and credit crisis of 2008? A lot of people say, oh yeah, I knew that was going to happen, but you didn't really see it coming. This one concerns a lot of people as well, the loss aversion bias. We are so afraid of losses that we are afraid of acquiring gains. Ryan, what have you seen most recently in your office?
Loss aversion is a big one, Spike. That really hits people hard, but we're really only thinking about loss aversion in down markets, right? We should talk about it in up markets, which is where we are right now, but we don't. Everything's good. We don't worry about it because the market's going up. If the market starts going down, we start getting the loss aversion conversation because we're scared to lose money, right? And nobody wants to lose money, folks. But the market goes up, the market goes down, the market goes sideways. It's guaranteed to do those three things, by the way, okay? Mm-hmm. And so the reality is that what we're talking about right now, Spike, is bias. Like what's been happening recently, okay? So if I look at the last 12 months of the S&P 500 index, for instance, it's up about 23% and some change. So 23% is a solid return. No question about it, okay? But is that? Why is S&P up 23%, right?
Do I get to answer? Or
go for it.
Well, because I wanted to ask you about this. This was another thing I was going to ask you about. It seems like a lot is being driven by the AI wave and people really loading into technology. In fact, they're calling it, I think, the Magnificent Seven still, Google and Meta and Nvidia. And I'm wondering, my follow-up to why I think the markets are so up is, do you feel a dot-com-ish happening? Do you feel a 2000 happening with this tech? Or is this a bull run that we can look forward to riding for a little while?
That AI is absolutely an investable play for the long term, for sure. Yeah. I also, to echo Mark Cuban, I also say that if you don't believe a Terminator is going to appear at some point in time, you're also out of your mind, because it's some scary stuff. But it's here to stay, and it's real, okay? And stuff I've read, by the way, says it could be as big as the internet, which is huge, all right? Yeah. There's all plays. There's the electricity to AI, a nuclear reactor. There's just all kind of stuff that's coming with this. So it's an investable option for sure. Okay. Now, let's look though at the recency bias. Let's get back to that for a second. Mm-hmm. The S&P 500 is what is called a cap weighted index. So the bigger your company is, the larger percentage the index you make. So let's look. Microsoft right now is the largest position in the S&P 500 index, okay? It's 7.3% of the S&P 500 because its market cap is so big, it's swelling to be 7.3%, okay? Nvidia is 6.75% of the S&P 500, 6.56, and 3.72%. Meta, Facebook, 2.4%. Alphabet, Class A and C is 2.35 and 1.98, about 4%, call it. All right, and then lastly, those are the magnificent seven there, Spike says, all right?
Yep.
So if we add that up, that's 13, 19, 20, about 25% of the S&P 500's return comes from these seven stocks, which is mind-boggling.
The whole point of the S&P 500 is that you're in 500
Okay.
of the largest companies,
Now,
and I think actually 505. That's the fun thing about it.
Let's look at United Airlines. All right, United Airlines is 0.03% of the S&P 500 index. Let's look on. Exxon, surprisingly, is about 1% of the S&P 500 index. And Exxon is a huge company, okay? United Healthcare, about 0.97%. Procter & Gamble is only 0.86%. So this is important because people look at the market and go, the market's up all this much. Should not be up this much too. Well, there is, folks. You certainly can be, okay? But you also have to understand is the more tech-heavy the S&P 500 gets, the more volatility it's going to have to the downside when a correction comes. And make about it, as investable as AI is, a correction is going to come. It's only a matter of time, okay? So you've got to be mindful that, hey, you might want that 23% return. It sounds really good. But remember, we're very big on understanding the other side of the investment at Allied Wealth, meaning what about the downside, right? My upside might be 23%, but what's my downside if it goes the other way? And it downside so much that if I've got too much exposure to that downside, I'm having to refinance my lifestyle in my golden years with less money, right?
Yeah.
So the S&P 500, yes, it's up 23%, but its drawdown is about 58% intraday. So yeah, you got 23% in the last 12 months, but historically the drawdown of the S&P is over 50%. It's massive. So you got to keep that in mind. So to keep people level-headed, Spike, we actually look at the market with it's a ticker symbol, by the way. It's called RSP, and it's the S&P 500 equal weight. All the stocks in the S&P are given the exact same thing.
I was just going to ask you, is the one that's out there equal?
RSP is a number. Okay,
so it's 500 of those companies, the same companies, but just equal.
We weighted, okay? And that's important because if you look at the RSP, it's up about 10.5% in the same time period. All right? It's one of those things where I don't want people looking at the S&P going, well, it's up 23% and I'm doing the wrong thing, or my advisor's doing the wrong thing, because they may not be, all right? Your risk exposure may be a lot less, and it's smart to look at the equal weight S&P 500 because what that can do is that can give you that recency bias, and here be in a situation where you're going, wait a minute, the market's going up. I missed that 23% return. Layer on more risk. Let's call my advisor and let's get more risky. Let's get more aggressive. Well, if doing that, folks, you may be getting more aggressive at the wrong time, all right? And that's a very bad thing to do. So understand this. Have money out there at different risk levels in your portfolio. Passive capital, moderate capital, balanced capital, have some conservative capital, and have some safe capital that provides guarantees of income and no downside risk in down markets. Leverage across that risk-return spectrum, and you won't have that feeling of, man, I'm really missing out right now because the S&P's up 23% and I'm not. Have some money out there in the S&P and some growth stocks and some tech stocks. Awesome. But don't bet the farm on that stuff.
So if somebody is in their 401k, or even if they have a pension plan at one of the oil companies who's listening to the program, do they probably have exposure then to this AI and these tech sectors already inside their S&P 500?
We had a client call us the other day. She's like, we don't own any Nvidia. I'm like, well, you have a 40% allocation to the S&P 500 in your account. And so based on that, you own a substantial amount of Nvidia, actually, because it's part of the S&P 500 index, right? Yeah, you can own it and you can play it, play the S&P 500, play some tech funds, but you can absolutely take advantage of this opportunity inside of your 401k by placing those funds in your account. And if you don't know what those are, call us at 844-944-7555. Again, 844-944-7555. Check us out on hirenowhouston.com. Send us your funds. What do you got in your 401k? We'll provide you an allocation and help you out. And we may even find that you have an in-service withdrawal available, and you can move the money out of your 401k into an IRA, a non-taxable event, and open up the world of investment opportunity that exists outside of those funds. Folks, next, Spike and I are going to spend some time talking about the election and how it impacts what's going on with the stock market, with the economy and interest rates. Don't touch that dial. We'll be right back on the Money.
844-944-7555. That's 844-944-7555 to get your own no-cost Portfolio X-ray. Claim your spot right now. 844-944-7555. We'll be right back.